I'm a pretty big believer that we're going to go through a pretty significant inflation over the next 3 to 5 years. And so you're going to see areas that do not typically appreciate at high levels appreciate, not because they're appreciating, but because of inflation.
What's going to happen is inflation's going to pull areas that haven't seen any real estate appreciation.
It's time for the Investment Joy Delicious Dollars podcast.
Hey guys, this is Brandon with the Delicious Dollars podcast. I'm here with my absolute first guest, Mr. Cole, who's going to introduce himself in a minute. Make sure that you like this video and subscribe to the channel because we're really excited to bring a lot of new content to everybody, talking about money, finance, building wealth, real estate, and how not to be poor. And if you notice here on my desk, I have $2,000 that we got from the laundromat yesterday. I counted it while everybody was away. So I can potentially make up a number, and everybody's going to be stuck here believing whatever I say because I'm the one in charge.
That's amazing.
So thanks for coming on our absolute first podcast, Cole. Do me a favor and introduce yourself. Tell us about...
Yeah, so my name's Cole Simpson. I'm a real estate investor and agent in North and South Carolina. Done a good bit with Airbnbs for myself and for clients, and starting to kind of branch out, and that's kind of why we got connected. So
cool. And we met at FinCon.
So we met the first time at FinCon 2021, I guess. So last September, and we spoke for, 30 seconds. And, I just knew you were in Ohio and you were doing some stuff out here. So I reached out. I was like, hey, this is what I'm trying to do. Maybe we can work together.
Cool. And this is day number 3 of us running around. We've shot a lot of content together. We've looked at buying a couple laundromats. We did a money collection at my laundromat. We looked at a couple properties to flip. We looked at an apartment complex. We looked at a portfolio. And then we're going to go golfing later, and we're going to see how much I can embarrass myself live and in person. We'll bring cameras with us. It's been a really fun thing. So we've spent 2 days together, driven around a lot, and we haven't talked any about Airbnb, almost nothing.
Yeah.
And one of the guys on my team said that that's kind of like a big thing for you, is your Airbnb.
Yeah, I just sold. So I own 2 of these currently, and then I manage a few more. I manage one in Blue Ridge, Georgia, and then Charlotte. So I'm in a metro and a vacation market. And I mean, I bought my first Airbnb about a year ago, and it's just the cash flow is crazy. So I don't talk about it a lot because it's one of those things when you start doing something, it kind of becomes boring. So it's like, why talk about it? Because I know how it works, but other people seem to like it. So
cool. So do you want to break the numbers down for us real quick on like your favorite Airbnb, your cost that took you to get in, and what you're making cash wise?
Yeah. So my first and favorite Airbnb, because it was the best deal I've ever bought to date. I bought a 5-bedroom house in Blue Ridge, Georgia. It was, sorry, the counting money threw me off. It was listed at $700,000 and had been on the market for about 95 days. So we got it under contract for $608,000.
Where did you say it was again?
Blue Ridge, Georgia.
Oh my goodness, I'm going to go to a cabin in Blue Ridge, Georgia on my way to FinCon.
It's awesome. Yeah,
good.
It's great.
That's insane.
It's kind of like a mini, less commercialized Gatlinburg is kind of the way I would talk about it.
Okay.
Which is one of the reasons in the last year. So
really,
yeah. So, but so it was listed at around 700 people. It's kind of near the highway, so people thought it wouldn't do well as an Airbnb. It'd never been one before, so we got it under contract for 608 with a $35,000 repair concession.
Okay.
So basically flipped everything. I used a second home loan, so I was all in for about $90K with furniture. Wow. And
interesting.
It's grossing between 11 and 15 a month.
Wow.
And then I net somewhere between a bad month 3 and then a good month like 7.
Dang.
So pretty big range.
We're going to have Jamie or somebody pull up. We don't have a Jamie. We have an Eric. I want to pull up the, if you can. Can you see any of my computer stuff from there?
No.
Okay, cool. So what we're going to do is I'm going to have you look at the Airbnb I'm staying at, because I've already been setting the numbers on it. Because I don't know anything about Blue Ridge, Georgia.
Sure.
Yet a friend of mine that lives in Circleville, he bought a cabin down there, and I think he paid $750 for it, and he's put $150 in renovation costs on it.
Yeah.
It's on 2.5 acres, but it's like an 8-bed, 6-bath.
Nice. I'm sure it's killing it.
Well, no, it's not.
Oh, really?
I've almost no vacancy. He found out after he called me and said, hey, if you run a story on your Instagram, and pretty much just a story on my Instagram, and I have a little vlog bit about staying at his place, he'll let me stay there for free. And he's only asking, he's trying to get his Airbnb status up. So he's like under renting it for $350 a night. And he's only got a 5% fill rate right now.
Wow.
Which is incredible.
When did he put it on?
A month ago, maybe a month and a half ago.
Yeah, it's a rough time.
But then he found out that on VRBO's listing, when you sort by bedroom count, they had him listed as a 1-bedroom, 1-bathroom cabin.
Wow.
Yeah.
That's a pretty big
So
mistake.
I'm hoping that I'm getting this free cabin because of his mistake.
Yeah.
Granted, we're going to run promos on my Instagram, which is blowing up right now, which is cool. But
yeah.
I said, if I go visit your Airbnb, I'll do it. I'll run a story on my Instagram. But what I really need to know is your numbers.
Yeah.
And he sent me all the numbers with it. And he's in, I can't believe the guy. He's almost $1 million into it.
Yeah.
And he has no occupancy on it. And he said, oh, we're bleeding cash, but that's okay. We're in this for the long haul. And it just blew my mind out of any investment this guy could get into. Rather than buying my dumpy rentals here in Circleville, he wants to buy a cabin in Blue Ridge.
Yeah, so we actually just had, we're going back live again, but we just had a fire that took about 3 months to fix.
Oh my goodness. That's okay.
Yeah, so a guest, hypothetically, who was not drunk, but there's argument about that fact. But he was on the front porch, and we have a fireplace on our front porch, and just burnt the front porch down. So we've had to redo that. Insurance is always fun. But yeah, we have a really high occupancy. I don't know why. I think it might be because our cabin is a 5-bedroom, so it's pretty big. And it just feels unique. It's a little bit more modern.
Interesting.
So it's kind of a different feel. But a lot of people are getting stressed about Blue Ridge just because they feel like people are overbuying in the market. And so people are really stressed about occupancy rates. I'm not really feeling that. I don't know why. But yeah, I mean, my property's appreciated probably somewhere in 40 to 50% in the last year, which is
incredible.
Yeah. So we're talking about cashing out, not because it's a bad deal, just because, I can make more money on other deals with that amount of cash. So
plus for the viewers that might be watching this right now, the little secret is if he cash out refinances this Airbnb, it's tax free.
Yep.
So you don't have to, you can harvest the gains without actually paying tax on it, which is absolutely cool thing.
Yeah. So we've been talking about doing that, or so you can. It's in my name right now, but basically do a quick claim and do an LLC, and then be able to do. You have to wait a year, but then be able to do a 1031 after that. So we've talked through a few different options with my tax guy. Not sure exactly what we're gonna do, but yeah, we won't sell it for. I mean, if somebody wants to buy it, I would sell it for $1 million, but we probably won't sell it for the next year. And then after that, we'll probably cash out. So we'll see how it goes. Yeah.
And so what do you think the cash out a year from now? Do you have any expectations on what you'll be able to cash out?
I think we'd be able to sell it for pretty close to $1 million.
Okay.
Yeah. And I'm going back and forth about whether we will actually sell it or whether we'll do a refi. Yeah, exactly. We're kind of going back and forth. I mean, the fire put a little bit of a bad taste in my mouth. One of the cool things about owning like one property like that that's cash flowing $5,000 a month is like, these are crazy numbers. But then if something happens, like, I don't know, a fire and you don't have rents for 3 months, it's like, I don't have another part of my portfolio that's covering this. And we do have some other properties, so we've been fine, but it's just, there are good things and bad things about
We had this conversation in the car, and I'm not sure if it went up on YouTube, but we just finished the insurance claim for my car wash.
Right.
And the wreck happened April the 5th. We ended the claim on May the 5th or May the 6th of 2022.
Yeah.
So it was 13 months to close the claim. And granted, it's going to be, it's already over $100,000.
Right.
So now we're like well above $100,000 at this point.
Yeah.
And if you would have told us a year ago that it was going to take a year to have all that stuff, all of the claim done, it's incredible. But then one of the guys that works for me, he does lawn mowing. He he didn't hook onto a car. A car hooked onto his trailer, flipped the trailer, absolutely destroyed a 0-turn mower.
Wow.
So bad that Noah, sitting on the couch, probably could not fix it. This is
crazy.
It's incredible.
Yeah.
I mean, probably a $15,000
They're not
claim before his loss of business revenue comes in.
Right.
He's almost entirely paid off at this point.
Wow.
Like, it was an incredible thing because the kid just turned 18 and he was asking me, can you legally sell? Because he found somebody that's interested in the mower with the twisted frame and everything. he has a loan on it. Can he legally sell the zero-turn mower, keep paying the loan on it because it's 3% interest?
Yeah.
And I'm like, oh, it's kind of interesting question for a guy that got a 3% loan at 17. He knew it was a really good deal,
Right.
At 3% interest on business hardware, which I thought, oh, this is interesting.
Yeah,
but
that's
I feel
awesome.
terrible for him because he had that wreck.
No, that's frustrating.
Yeah. So
Yeah.
interesting. So are you seeing, out of curiosity, much of a market for like turnkey Airbnb stuff?
Oh yeah. So as an agent, we sold about 30 last year.
Okay. So what kind of cap rates are you seeing on short-term rentals versus long-term rentals in your market?
So cap rate, we're going to be 15 to 17.
Okay.
As a short term, and as a long term,
Interesting.
it's going to be hard to break 7 or 8.
Interesting. So you're seeing about double cap rates on
at least
what it is. And how much of a rental history are you selling these things on?
No, we tend to buy properties without them.
Okay.
So basically, we're kind of a faux turnkey. So basically, a lot of what we do is we find the property, we analyze it, we have a team that'll furnish it, we have a team that'll manage it.
Okay.
And so kind of almost like make it into a turnkey for you. But
okay. Yeah. So, but you're selling them on pure speculation then. That's where I'm going.
To some extent, yeah.
Good, because the reason I'm asking is because I'm always interested in hearing where investors are going with their money.
Right.
And it seems like everybody's dumping money into Airbnbs. And I've heard, and you're quantifying it for me, that the cap rates that they're selling Airbnbs on is just insane.
Right.
And there's a lot of cities that are trying to crack down on Airbnb, as I'm sure you said.
Atlanta just said you can only have 2 and you have to live in one.
Yeah, and you have to live in one. And there's other ones that are limiting, you can sell the property, but you can't Airbnb it.
Right.
They're trying to limit the number of
Nashville,
permits.
It's hard to get a permit now. It's a whole process. Yeah. Right.
They're trying to limit it, and they're not blaming it on the rents increasing. They're blaming it on housing availability.
Right.
Everybody's buying properties for Airbnb to rent them out. And that to me means there's a lot of speculation. And it's just interesting to hear those are the cap rates that people are quoting, because Airbnb has not had a super long track record like long-term rentals have.
Yeah, I mean, my Georgia house has a 70% cash on cash return. So it's just like,
that's incredible.
Yeah, it's just, the way that I would talk about it is like, I think Airbnb is high risk, but the reward is higher as well. So if you go in, you make smart decisions. We always, with my clients, we kind of walk through like a pro forma, but also a worst case. So like, I'll just use my property, for example. It projected to do about 125 a year. Oh, wow. If I did 49, I'd break even.
That's incredible.
So it's just like, is it going to do 125? Yes, it's actually going to do more than that. But that's not the point. It's like, okay, but how hard is it going to be to do 50? Like I have to do 40% of this projection in order to break even. And so different. And people do not like it because it is harder to quantify. And I think that's why we've actually even had successes. We've done more to quantify it with comps and with data through AirDNA, but also through our personal connections.
Sure. So a friend of mine, he mentioned this to me for Airbnbs because he's wanted to partner with me on some medium to higher end Airbnbs.
Yeah.
But the thing that he mentioned to me, a friend of his outside Pittsburgh,
okay,
and it wasn't that long ago. I should take that back. It was a while ago.
Okay.
And they had a premium Airbnb experience, let's call it.
Sure.
It was a good property, but it wasn't a great Airbnb. But the deal was they had an upsell portfolio. And you could rent the Airbnb out, and it was, do you want to ride horses while you're at our Airbnb?
Yeah.
And the upcharge was $1,000, and they had to deal with a local equestrian person, and their cost was $250. The equestrian would come out. Would you want a professional chef to come and cook you all your food in house? They said that their cost was $150 a day. The upcharge was $750.
Yeah.
And they had this, do you want to bring bouncy houses out?
Yeah.
That was $500 and they could get them for $75. And so what they had was this upsell menu of different things. And he told me that the Airbnb on its bones was $3,500 a weekend. But with upsells, if memory serves me right, they were on an average 3-day weekend of $10,000.
Yeah.
Because it was the Airbnb, but then there was this experience package of having a photographer and videographer would come out and they would video you riding the horses around and doing the bouncy castles. And that concept to me was just really incredible.
Yeah, it's smart.
And I'm like, I had a friend of mine mention that. We mentioned in the car ride earlier that a friend of mine has an Airbnb at Lake Norris,
Right.
in outside Nashville, and they're doing over $5,000 a day on theirs.
Yeah,
but
it's wild.
they've never had premium experiences. And my friend, that his parents own his parents own the rental on Lake Norris. He's tried to convince them of offering premium experiences.
Right.
They have no interest in it because it's too risky to let someone bring horses out.
Yeah.
And it's like, that's a third-party vendor. You have a third-party contract. You're doubling your cost of it, but you're providing an opportunity. You're generating more sales for them.
Yeah, I mean, if I was making $1 million a year on an Airbnb, I don't know that I'd want to mess with it either. I might don't fix what's not broken.
It's just something that's interesting to me, and I haven't had the opportunity to talk to somebody that's big
it's a
into
cool
Airbnb.
idea, and I know some people that have done it and have done it really well in Florida. I know some people who are kind of doing similar stuff, the chef and stuff like that, and they're making a killing. I mean, when a lot of so as I got into real estate as an agent, basically worked predominantly with investors, and everybody is kind of, how do I do financial freedom, right? Oh, I want to make $5,000 a month. I want to make $7,000 a month. And for the typical person, that's working a day job, it's just like the amount of time it would take them to do it with, long-term rentals is just significant. And so kind of what we would do with a lot of people is we would do short-term rentals first and then just use that cash flow to start buying long-term rentals. So it's not even hey, do we think this is going to work for 5 years? It doesn't matter if it's going to work for 5 years. Let's just get the cash flow up, and now we can start turning it into more safe stuff. Yeah. And then you sell it, and you be able to liquidate and buy more. So it's kind of, you start at this high risk, more involved, and you move towards a low risk, less involved portfolio. And we had some success with that. So
it sounds really, really cool.
Yeah.
So we will post all of your social media on the video. So if anybody wants to connect with Cole, invest with Cole, and do whatever, follow him on his social media journey, I guess. We'll post all of that. And in the comment section, if you have a question for him, I'm sure he'll be monitoring the comments. So if there's one segment of your business that you hope to expand over the next 12 months, as we're going into a point where people are worried about a recession, what would those places be?
Yeah, so we're really starting to focus more on affordable housing, which, like I said, is kind of why we came out here. So we're flipping mobile homes, and we're trying to scale that up to do about 5 to 10 a month. Average profit on that's going to be between 15 to 20K.
That's crazy.
Right. So it's like we've only done a few so far, but been doing it with some partners, and they kind of have been doing it on the side, and just no one else is doing it, at least where I'm at. And so we really think we can get that to 100, 200 a month, and then wanting to use that money and some other money from investors and buy kind of affordable housing, whether it's Section 8 or not, really good. But also, I'm a pretty big believer that we're going to go through a pretty significant inflation over the next 3 to 5 years. And so you're going to see areas that do not typically appreciate at high levels appreciate, not because they're appreciating, but because of inflation. And so you're going to be able to buy these $80,000 houses, and in 5 years, they're going to be worth 125, even though normally they would never do that fast. So that's kind of what we're focusing on our strategy.
Yeah, and I think that's an absolutely valid thing, because what's going to happen is inflation's going to pull areas that haven't seen any real estate appreciation. Like, I would say practically all of West Virginia, practically all of Kentucky, Alabama, Mississippi, like these Oklahoma, Missouri, like what people call flyover states, the states that I like doing stuff in anyway.
Right.
And you look at those areas. I've seen places in Eastern Kentucky where today you can still buy acres for $500 an acre. You can still buy a house for $50,000. And you look at that and you think, oh my gosh, inflation and appreciation has never touched those areas. It hasn't gone up in 30 or 40 years.
Right.
And yet I'm seeing those places really start to tick up, not because people are moving there, but because just the money, it's just so much money out there.
Yeah. And I mean, it's kind of everyone, not to get too far down this rabbit hole, but like everyone right now are we in a second 2008? Are we in a second recession? And kind of, and I definitely don't know everything, but the thing that I find interesting is when you look at hedge funds, they're practically all buying houses faster than they have ever bought houses before. Which doesn't mean that they're right, but it does mean that people that monitor billions of dollars and have to choose to invest it are choosing to invest in single family homes in a lot of these non-sexy markets. Yeah. And so it's just interesting, you look at the home ownership rate in the U.S. and kind of the different culture with millennials and who does want to own a house and all this stuff. And I think it's a guess, but I think we might be in a shift where just less people own houses. And so I kind of tell everybody, look, we don't have to argue about whether it's right or wrong. That's not really relevant to this conversation. I think we're in a pretty big shift where there's going to be the haves and the have-nots, and you want to be in the haves of owning homes, because in 20 years, that is just there's going to be scarcity. And
I agree with you 100%. In between the amount of money that's out there,
it's crazy,
and the fact that we have a very huge deficit of people in the skilled trades, so they're the new housing cannot be built quick enough.
Yeah.
Over the past 10 years, we're at like 1/3 of that number of units that needs to be built.
We're like 5 million behind, right, or something crazy.
Just sustain the level of housing that needs to be built.
Yeah.
And it's like now, when you can't get windows on a new build to save your life, they're like 4 months out.
Right.
And I'm sure at some point that's going to resolve. I've seen the price of lumber start to come down again finally.
Yeah.
But even then, it's just all of these costs are getting baked in.
Yeah.
And, I've seen people do new builds and they used marine plywood for the subflooring because they couldn't find regular plywood. And when that house sells, it's going to have that cost included in it.
Yeah, I was listening to a builder friend of mine, and they were trying to build at $300,000-$400,000, and just because of material prices, they're now at $700,000-$800,000. But they're not making any more money. Like their profit per unit is the same, and in fact, sometimes they're even making less money. And it's just like we have to go up. This is what we want to do. And so I don't know. Like when you look at a significant price drop in real estate, it's pretty much at the end of the day, a lot of it's going to come from, supply has to outpace demand. And it's like, okay, so where these homes are going to come from? And it's like, 90% of people who own homes right now have a rate below 5%. Mm-hmm. So they're practically as good or better than any rate they can get right now. New builds are basically out of the question. Yeah. And our inventory is incredibly low, and people are less interested in moving because they feel like they can't get a house for same value. So I just don't know where it's going to come from. Yeah. Doesn't mean that I'm right. Anything could happen, but that's how I'm thinking about it.
Yeah, and that's kind of where I'm at too, for reference, just so I can be on the record, so we can go back and review this video in 5 years to see where we're at on the first Delicious Dollars podcast.
Yeah,
but like the thing that I look at is, so you've got an undersupply of houses. We talk to people that believe there's going to be a significant crash, so they assume, or they believe, that the supply is going to come from foreclosures. Well, you have foreclosures because people have to sell and there's no buyers out there. That's not the case. That was the case in 2007, 2008. There were way more sellers than there were buyers.
Right.
There's tons of buyers right now.
Yeah.
They expect there to be a tidal wave of job layoffs, which I guess I could see that. But in every market that I'm aware of, other than like Silicon Valley, the places that have like where Twitter and Netflix and those big headquarters are, all the other parts of America have significant job deficits.
I think the rate is there are 2 jobs for every person looking for a job right now, I think is what it is. So
and that sounds right to me.
Yeah.
And the thing is, so you get laid off. Right now, there's another job out there ready and willing to go.
Yeah.
So then I don't think there's going to be the massive layoffs unless a nuclear bomb gets dropped or something. Which
of course, anything could happen.
Yeah, anything could happen, but I just don't see it.
Right.
But we're going to go into this very odd situation with the economy. But I also don't see us becoming a stagflation level country like Japan.
Right.
Because I talk to the average Japanese person, I get a lot of messages from people in Japan. And they say, I just can't believe you do the things that you do in the United States. I'm like, well, why don't you go out there and get it done yourself? And they don't have that thought process of, well, I can go out and start a business. I can go out and get a job. I can go out and do this.
Right.
They have my parents told me to do this, and this is what I have to do. I have to go to college. I have to do this, live this very set linear life.
Yeah.
And when you look at the expansion of economy, like Japan's the one that I like to look at. And then Germany kind of has some weird similarities to it. What's interesting to me is no one has that thought process. But here in the United States, everybody's trying to get rich. Everybody's trying to make $1. Everybody's trying to figure out something. So I don't even see that style of stagflation.
Sure.
Even though we've kind of got all this inflation coming, we've got these things as a potential hazard in the future.
Yeah, I mean, I just, it's like, I think there was a study, and I'm going to get it wrong, but it's something like, it was talking about the stock market, but like, if you missed the 5 best days in the stock market in the last 30 years, your return is like 4% on average. And it's just the argument of like holding for the long term is better than trying to time them. And I think real estate is the same thing. I don't have a study that says that, but it's just like real estate has always been a great hedge against inflation. We know that we're about to go through a significant inflation period over the next year, at least, probably 2 or 3 years. And so I just don't really, and then people are like, the rates are high. It's like, this is recency bias. The rates are not high historically. So I'm buying, but I buy in every market. So I may not be the right person to talk to, you know?
But I don't care either,
Right.
because everybody says I'm in the right. I have half the people say I'm in the right market, half the people I have say I'm in the wrong market. So you can't really please.
Well, and if you're
everybody.
buying for cash flow, it doesn't matter. Rents dropped by less than 10% in 2008. So it's just like, yeah, you're going to be fine if you're buying for cash flow. The people that got in trouble in 2008 were developers and flippers primarily, or people that were just buying 5 houses because they could. That was the average. There are exceptions to every rule, but the average person who got caught with their shirt off or lost their shirt because they were, you know, abusing the system, but not in a way that produces income. They were not looking at them as assets.
Yeah.
So,
Which is crazy.
Yeah.
Have any questions for Cole? Mr. Rich Moneybags, Airbnb. The state of Ohio, the glorious state of Ohio, the crown jewel of the Midwest, do you think are good?
Yeah, I like the Southeast and the Midwest for a few reasons. One, they tend to be landlord-friendly states, and so I just like to invest. East and the Midwest are cheaper, so you're going to have more room for growth, and I like that opportunity. And then there are more tax incentives in the Midwest and the South. Remote jobs, people are moving to what real estate you would call 18-hour cities. So New York, LA, Miami would be what we would call a 24-hour city. 18-hour cities would be places like Kansas City. I don't know if Columbus would qualify, but you get the idea. Not as big. And so people are moving to these places because they have almost all the same amenities as 24-hour cities, but they're cheaper. And so, okay, I'm going to get my San Francisco job significantly cheaper, and my quality of life is going to go significantly up. And I think we're going to continue to see that trend, in my opinion. So I like the Southeast and the Midwest, and I'm investing in affordable housing. So again, that's going to, you can do that in other places, but it's easier to do in the Southeast and Midwest.
So Noah's question to you is, coming out of college, what the heck do you do?
Real estate is it's one of the coolest industries, businesses in the world, because it really is like with the right information, anybody can make just an absurd amount of money, just to be honest. But what I've told him multiple times is buy a quad, buy a fourplex. You're going to be able to qualify if you have any job, because you're going to be able to use the rents of the other 3 properties towards your DTI, or debt to income, and then live there for a year and move out. And now you have 4 rentals, and just keep doing that. I have this thing. So we did that multiple times. We bought a house, lived there for a year, moved, used an owner-occupied loan. So we was somewhere between 3 to 5% down, rented out the other one, just kept doing that for a few years. Without fail, would say some version of, I could just never do that. I just don't want to move. That's too much work. And one time I sat down and just did the average appreciation over 5 years, all this stuff with people. Not what I've seen, because we've been in a crazy market, but just the average appreciation. And I broke it down in dollars of appreciation, and at the average market price, and at about $1,100 in cash flow. So when you say, I don't have time to take 45 days, 50 grand this year, and make $200 a month forever for an hour a day for 45 days. So that's what I would say to do.
For reference, we have a video on this where I interviewed one of Graham Stephan's guys, and one of Graham Stephan's followers on Discord, and he bought a quad.
Nice.
And he figured out that he could get the FHA homeowner exemption by living in a closet under the stairs.
That's awesome.
So he rented all 4 units out, but he had to live in a closet for a year.
That's amazing.
So I did a video called "Would You Live in a Closet for $1 Million?" And the thought process behind the video was, if you would do that just like 3 times over your 3-year period, you would end up having is like over $2 million, just based on pure averages.
It's wild.
You have to save up, the down payment for the average house.
Well, and you can save up the down payment because you don't have a mortgage. So you just, instead of, and even that, like DoorDash for 5 hours a week, makes you an extra $500 a month, $6,000 a year. If you house hack, you can save an extra. So now we're at 15,000. In most markets, you're going to be able to buy a duplex in 5 minutes for that amount.
Yep.
So
absolutely. And I did that as a challenge. We talked about it. I had a person challenge me on live on a Twitch stream, and they said, this will never work where I live. And I said, where do you live? He said, Westchester, New York, one of the most expensive markets in the city. And I said, that's fine. Let's challenge me. Got on realtor.com. I said, have you ever been to Stamford, Connecticut? He's like, yeah. How far is it from your doorstep? He said, it's a train ride or whatever, 45 minutes away. I said, here's a duplex. You can house hack it. You can get it for $325,000. The duplex already showed on paper was bringing in $3,200 a month.
Yeah. 1% rule, you're done.
Yeah. You can do it. And we did that live on a stream. It took me 3 minutes to find the house.
Yeah.
And so this guy had been complaining for years on social media that he could not find any house. And it's because he was only looking at his backyard and he didn't consider that he could get in a car and drive.
Yeah. And I even tell people, like, because a lot of investors are really, I got to find the off-market deal. I got to find the good deal. It's like, you don't even. Like, in the beginning, it's great if you can. And you definitely can. Like, we've talked about that. If you hustle and door knock and cold call, you can do that stuff. I'll find you a decent deal on market, because you can find good deals on market. And that'll just be a good starting point, and you'll build over time. It compounds really fast.
Yep. So cool. How are we doing, Eric? We're really good. Okay, cool. All right. Okay.
So I kind of wavered back and forth on this for a while. I was like, don't get a real estate license unless you're going to be a realtor, just because it's not actually worth it. But I was also a realtor making money on it. So it's like, where's the bias? If you will put in the time to actually learn the market, it's probably worth it, because I'm a semi-active real estate agent now. I've honestly not been great the last few months, but I'm still doing 2 or 3 deals and a referral here or there. And when I buy a house, I can put the commission towards my cost. So more than that, I've paid for my real estate license at any price point. Like, it doesn't even matter. It's like, well, not if it's a $50,000 house. Yeah, it's a $700 to keep my real estate license even then. So it's worth doing, but just put in the time. I would say try and be an agent for a few months, or try and do it on the side for a few months, because it'll help you learn how to think about it, et cetera, et cetera. Yeah.
So should you get a real estate license to invest in real estate? And okay, that was for the clip.
Sorry.
We'll clip it out. No, it's fine.
I forgot.
It's fine. No, it's great. No, so I want you guys to think about this. Who's a real estate agent? I'm a real estate agent. You're a real estate agent. Meet Kevin's a real estate agent. Graham Steffen's a real estate agent. Ryan Pineda's a real estate agent. I think Cardone was an agent. I think that almost all of the people that I've run into that are like big social media people in real estate, I think every single one of them is a real estate license. And I know for me, it blew my mind when I got into real estate training in real estate school, when they were going over all the basic negotiation tactics, basic marketing tactics, basic how to talk to people, how to be friendly. When you talk to somebody on the phone, you should smile, because if you smile, it comes over the phone that you're actually happy and interested in talking. He's laughing at me right now because he's like, yeah, I took this training. That was awesome. But it blew my mind as a poor kid from Southern Ohio who didn't know anybody that made over $40,000 a year. My broker was making $250,000 a year. And he's like, this is the training that you have to do. We spent $1 billion on this training. Like, we freaking spent $1 billion analyzing people's phone calls to figure this stuff out. And gosh darn it, you should learn it. And as a 21-year-old kid, it was mind blowing. But it's not about the life.
The cool thing about real estate agents, and actually I would say agents, lenders, insurance, and financial advisors fall into these categories, is you're doing the opposite of what everybody else is doing. So just by nature, you gain clients, you get better. And so you start making more money, but it becomes less and less work. So by the time you're 29 to 31, if you actually do the work, probably faster, just to be honest, you can make 6 figures, and it's like you're working 20 hours a week because you've put in the time. Mm-hmm. So real estate is those type of jobs are a really good example of don't work for money, work for the experience, which is why I tell people, go be on a crazy, huge team that's going to give you leads, that's going to teach you how to be a real estate agent. They're going to take 50% of your commissions, but who cares, because you'll do 50 deals your first year. Yeah. You'll make more money than you would have made anyways, and now you understand how to do it, and it's cool experience for you, because now, even though you've never bought a house, you really understand the process for when you do. So,
yeah. Any other questions? Off-lead, like off-market properties?
I didn't know if you wanted to reset.
Oh, okay. You're specifically asking us about how to find properties that aren't on the internet? Okay.
Yeah, the easiest way is to door knock an hour a day. If you door knock an hour a day, you will get a great deal in a month. And if you don't, it's because you don't have the skills. But you'll also learn the skills. So if you can do it with somebody who's good at it, that'll be even faster. Works. Direct mail. So you can send 1,000 postcards. You're gonna get about a 1% response rate. I will say, in my experience, the more in person you are willing to be, the more results people don't want to. I'll sit here and send 1,000 messages on LinkedIn, but I won't just go talk to 50 people, right? And so you are differentiating yourself immediately because you're at my door. I didn't know it at the time, but it super prepared me for investing because you just had to be okay with asking people for money and not like giving them the excuse of like, you have to say no. I'm going to keep calling you until you say no. And when you say no, I'm never going to bother you again. But until that moment, I got okay with failure, and that helped me a lot. And then I wholesaled for a little while. That helped too. So, yeah.
The thing that I tell people is like, okay, you can make $1 million in real estate in 5 years. I think that's very achievable to get $1 million worth of equity. Would you agree?
Yeah. Oh, yeah.
So let's put the carrot on the stick at $1 million in real estate assets or net equity over the course of 5 years. How many phone calls would you make for $1 million? And you think, oh, I would calls. Okay, so you're making $1,000 per phone call. Phone call lasts 60 seconds before you get hung up on or whatever. I think your average person off the street would make a phone call for $1,000. Would your average person on the street make a phone call for $500? Yeah, it's $500. Would you make a phone call for $100? Maybe.
I feel like most people
I think a lot of
would.
people would.
Yeah.
Would you make it for $10? Probably not.
Sure.
I mean, some people need that $10.
Right.
But I ask people that question, would you do it for $1 million? Would you make phone calls for the next couple of years, just one a day for the next 3 years for $1 million? Oh yeah, I'd do that. But you start looking at the how the math works in getting real estate deals. It works pretty much every time, but the number of people that want to put the effort in. And the worst part is it's all front end loaded. Your least chance of success is earlier on.
Right.
You do it for 3 years, you know how to talk to people. Yep. It gets so easy to where my closing rate right now for finding an investment property, like when I'm actually in the deal, looking for a deal phase, I close probably like 25% of the properties I look at.
Which is wild. That's very high. Normally you're like 3 to 5% would be a normal.
But this is all with personal contacts.
Right.
It's not with postcards.
Helps.
It's not with cold calls. It's not even with door knocking. I know, I hear through the grapevine that somebody might want to sell something. So I find out where they live. I get their phone number. Or I find their best friend on Facebook and I say, hey, I need an introduction to John. I hear he owns 20 rentals here in town and I need to talk to him about selling them. I heard he's going to sell them. Do you agree with me? You want to do this? And when I get a personal introduction where they say, hey, John, this is Brandon. He's a local real estate investor. He has really nice rentals. I think he might be a good fit to buy your portfolio out. My rate of closing is very, very high.
Yeah. The thing that bothers me so much about real estate agents is if you look at the $1,000 a year, but what they don't factor into that is time. The average agent that works over 50 hours a week makes 110.
That's insane.
So it's just like, just work 50 hours and you'll make 110. And it's like, that's the average. So just like, if you do it for 2 years, it's crazy.
It's crazy. All right. Cool. Any other questions? This has been a very good conversation on the very first official Delicious Dollars podcast.
What a name.
It's because we like the dollars. We like money.